Welcome to Ghost Wallet. Subscribe to this channel. $50 billion. Just wrap your head around that for a second. That's more than the entire GDP of Iceland, and it's the mind-boggling price tag now hanging over the iconic logo that greets you every time you boot up Madden FC or The Sims. In the next few minutes, we're going to break down exactly who's trying to buy EA, why they're using a mountain of borrowed cash to do it, and, most importantly, what this massive deal could mean for the game sitting on your hard drive right now. Section 1. Why EA? Why now? Let's be honest, EA's stock has been stuck in the penalty box for what feels like an eternity, 2 straight years, to be precise. We saw FIFA walk away, Battlefield 2042 stumble hard at launch, and then, to add insult to injury, 3 rounds of layoffs since 2023. Public markets absolutely despise uncertainty, right? So, it's no surprise that CEO Andrew Wilson started quietly flirting with private equity shops last winter, looking for a way out. Silver Lake, a tech-focused buyout veteran known for big plays, bit first. But they weren't alone. They brought in 2 heavyweight co-investors who, frankly, love long-term plays and couldn't care less about quarterly earnings calls: Saudi Arabia's Public Investment Fund, PIF, a massive sovereign wealth fund, and Affinity Partners, Jared Kushner's Middle East-backed firm. Together, this powerful consortium is prepared to fork over around $49 to $50 billion, financed partly by JP Morgan Chase and AMP, company's considerable balance sheet, all to take EA private before the holiday season. It's a bold move, signaling a major shift in the gaming landscape. Section 2. Leveraged buyout in plain English. So, what exactly is a leveraged buyout in plain English? Think of it like buying a huge mansion with next to no money down, say, just 5% of the total price. The buyer puts up a really thin slice of their own equity, then, and here's the kicker, they strap the house itself with the mortgage. In EA's case, the house isn't just any property, it's a veritable cash flow machine, spitting out a staggering $1 billion a year from Ultimate Team packs alone. That's a powerful asset. Silver Lake, in this deal, will layer about 60% of the purchase price onto EA's books as brand new debt. But here's the real twist: once the company goes private, every single extra dollar EA saves on things like marketing, studios, or server costs flows straight into the pockets of the new owners, not to those pesky public shareholders. If they manage to hit their aggressive financial numbers, these investors will then either flip the company or recapitalize it in about 5 to 7 years, walking away with a hefty upside. It's a high-stakes gamble, but with potentially massive rewards. Section 3. Winners and losers inside the deal. Let's talk about who wins and who loses inside this monumental deal. On the winner's side, current EA shareholders are getting a sweet 15% premium overnight. That's roughly $193 a share, a nice bump, isn't it? Silver Lake, of course, locks up another iconic cash cow for its portfolio. The Saudi PIF diversifies its massive wealth away from oil, scoring a significant foothold in Western esports and the broader entertainment sector, aligning with its Vision 2030 goals. And Affinity Partners? They stand to gain substantial management fees and some serious geopolitical goodwill. But then there are the losers. First up, anyone who valued EA's transparency. Those quarterly reports? Gone. That means gamers won't get a heads up on future headcount cuts or those inevitable monetization experiments. And don't forget the bondholders. Fresh billions in senior debt will unceremoniously shove them way down the capital structure food chain. Not a great look for them. Section 4. What happens to your game's private equity firms? Let's be clear, don't buy a Ferrari just to garage it. They buy it to drive it hard and make it earn its keep. So, expect 3 swift moves. First, intense cost synergy. Brace yourselves for another round of layoffs and the inevitable sunsetting of live service titles that just don't hit internal ARPU, average revenue per user, targets. Second, expect a deep dive into monetization. Ultimate Team and FC will undoubtedly double down on season passes, cosmetic bundles, and increasingly sophisticated AI-driven pricing strategies. Third, strategic expansion will be key. Silver Lake absolutely loves platform plays. Watch for EA to start snapping up mid-size mobile studios, then bundling their ad inventory with giants like Apex Legends to sell directly to brands. The potentially good news here: development timelines for big titles like Battlefield 6 and the next Sims could finally get insulated from the constant stock price panic, meaning crunch time for developers might actually shrink. A silver lining, perhaps? If you're hungry for more deep dives on where the big gaming money is moving next, then do yourself a favor, hit that subscribe button and ring the bell, because trust me, this wave of consolidation is just getting started, and you won't want to miss what happens next. Section 5, Industry Dominoes. This $50 billion LBO isn't just about EA, it lights a massive fire under every boardroom from Santa Monica to Tokyo. Suddenly, companies like Ubisoft, Take-Two, and even Embracer's sprawling, scattered assets look like absolute bargain bin deals. While giants like Microsoft and Sony are currently constrained by regulators and can't really bid right now, private capital faces no such ceilings. This deal, being the largest gaming LBO in history, is a clear signal of strong investor confidence despite recent market softness and sluggish growth. So, what can we expect? A wave of copycat take-privates is highly likely before the Fed cuts rates again. For us gamers, that probably means fewer public forums, more surprise studio closures, and, on the brighter side, if you can find it, potentially bigger war chests for those long-delayed sequels we've been dreaming of. The big picture. So, here's the big picture, the final snapshot. Silver Lake, Piff, and Affinity are literally about to slap the biggest mortgage in gaming history onto EA's balance sheet, yank the company off public markets, and then sprint full speed for the end zone of private profits. You'll see shareholders cheering all the way to the bank, developers bracing themselves for what's next, and us gamers. Well, we'll be waiting to see whether shorter crunch times or even pricier loot boxes ultimately win this high-stakes coin toss. Which outcome would you bet on? Genuinely smoother, more polished games, or even steeper, more aggressive microtransactions? Drop your prediction below in the comments, and let's check the scoreboard together when this monumental deal officially closes.